Subpart 7 of the Bank Holding Company Act, within the Reference Guide to Regulatory Compliance on 612, financial holding companies. Subpart A, for a bank holding company to become a financial holding company, all depository institutions controlled by the bank holding company must be and maintain well capitalized. Number 2, all depository institutions controlled by the bank holding company must be and remain well managed. They must have received at least a satisfactory composite rating and a satisfactory rating for management on their last examination. Third, the bank holding company must have elected to become a financial holding company. And fourth, a foreign bank may become a financial holding company by complying with the regulation. B, under financial holding companies, is the procedures for electing to become a financial holding company. A bank must file a written declaration with the Federal Reserve Bank. The written declaration must state that the bank holding company elects to be a financial holding company. B, provide the name and head office address of the company and of each depository institution controlled by the bank holding company. C, certify that all depository institutions owned by the holding company are well capitalized. D, provide the capital ratios for all relevant capital ratios as of the close of the previous quarter for each depository institution controlled by the holding company. E, certify that all depository institutions controlled by the holding company are well managed. Letter C, under financial holding companies, is an election to be a financial holding company will not be effective if any depository institution controlled by the holding company has not achieved at least a satisfactory rating on its latest CRA examination, or any depository institution controlled by the holding company is not both well capitalized and well managed. D, the Federal Reserve may limit or otherwise restrict the commencement or conduct of financial activities of the financial holding company if the holding company does not have the financial resources, including capital resources or managerial resources, to conduct business as a financial holding company. E, recently acquired depository institutions. A depository institution will be excluded from the CRA rating review if it was acquired during the previous 12 months. The bank holding company has submitted an affirmative plan to its banking agency for the actions necessary to cause the depository institution's CRA rating to be at least a satisfactory. And 3, the appropriate banking agency has accepted the plan. F, effective date of election to be a financial holding company. The election is effective on the 31st day after the date the election was received by the Federal Reserve Bank, unless notified to the contrary by the Federal Reserve Board. G, consequences of failing to meet the capital management standards. 1, notification by Federal Reserve Board. If notified by the Federal Reserve Board that a depository institution has ceased to be well capitalized or well managed, the bank must, within 45 days, execute an agreement to comply with all applicable capital management requirements. 2, a financial holding company must notify the Federal Reserve within 15 days of becoming aware that any depository institution controlled by the holding company has ceased to be well capitalized or well managed. The areas of noncompliance must be stated. 3, agreements to correct deficiencies must A, explain the specific action that the financial holding company will take to correct the areas of noncompliance, and B, provide a schedule for taking the action. C, provide any other information required by the Federal Reserve Board, and D, be acceptable to the Federal Reserve Board. 4, restrictions on activities. Until the financial holding company has corrected the areas of noncompliance, the Federal Reserve Board may impose any limitation or condition on the financial holding company that it deems appropriate, and the financial holding company may not engage in any additional activity or acquire control or shares of any company without prior approval. 5, failure to correct problems within 180 days. If the financial holding company does not correct the non-compliant areas within 180 days after receiving the initial notice, the Federal Reserve Board may order the financial holding company to divest itself of the depository institution. The financial holding company can comply with a divestiture order by ceasing to engage in all activities not permissible under the Bank Holding Company Act. H. Consequences for failing to maintain a satisfactory CRA rating. The financial holding company may not commence any additional financial activities or directly or indirectly acquire control of a company engaged in financial activities if, per se, it fails to meet satisfactory CRA rating or to get a satisfactory CRA rating. I. Prior approval of the Federal Reserve Board to engage in financial activities. A financial holding company may engage in any activity allowed by the regulation without prior notice or approval of the Federal Reserve Bank. And 2, a financial holding company may acquire a company engaged in permissible financial activities without prior notice or approval of the Federal Reserve Board. May acquire more than 5% of a company engaged in limited non-financial activities if substantially all the activities conducted by the company are financial in nature, incidental to a financial activity, or other permissible activity for the holding company, financial holding company. B, the financial holding company conforms, terminates, or divests all activities that are not permissible within 2 years of the date the financial holding company acquires shares or control of the company. Following the company, the acquisition of the company does not engage in or acquire shares of any company engaged in an activity that is not permissible. And D, may not acquire more than 5% of the shares of a savings association without prior approval. So this is number 3. Under prior approval of the Federal Reserve Board to engage in financial activities. Once a company becomes a financial holding company, it doesn't need prior notice to engage in any financial activity allowed by the regulation or acquire a company that is engaged in such activity, or acquire more than 5% of a company engaged in limited non-financial activities, as I just went over. Okay. So J, a financial holding company may conduct any permissible activity at any location within the United States and outside the United States, provided such activity is permissible under applicable law. K, activities that are permissible for financial holding companies include activities closely related to banking, providing administrative and other services to mutual funds. 3, owning shares of a securities exchange. 4, acting as a certification authority for digital signatures. 5, providing employment histories to third parties for use in making credit decisions, and to depository institutions and their affiliates for use in the ordinary course of business. 6, check cashing and wire transmission services. 7, notary public services, selling postage stamps, providing vehicle registration services, and selling public transportation tickets and tokens in connection with offering of bank services. 8, real estate title abstracting. 9, providing management consulting services with respect to non-financial matters so long as they are advisory. 10, operating a travel agency in connection with financial services. 11, organizing, sponsoring, and managing a mutual fund so long as the fund does not exercise control over the entities in which the fund invests. B, the financial holding company reduces its ownership in the fund to less than 25% of the equity of the fund within 1 year of sponsoring the fund. 12, acting as a finder or bringing together buyers and sellers of any product or service for transactions that the parties themselves negotiate and consummate. Acceptable activities include identifying potential parties, referring and introducing potential parties to one another, conveying expressions of interest between potential parties, transmitting information concerning products and services to potential parties, hosting electronic marketplaces on the financial holding company's website by providing links to third-party buyers and sellers, and hosting on the financial company's server the website of buyers and sellers. Limitations. The finder may act only as an intermediary between a buyer and seller. A finder may not bind any seller or a buyer or seller to the terms of a specific agreement, or negotiate the transaction on their behalf. 3. A finder may not take title to or acquire or hold an ownership interest in any product or service offered or sold through the finder service. 4. A finder may not provide distribution services for physical products or services. 5. A finder may not own or operate any real or personal property that is used for the purpose of manufacturing, storing, transporting, or assembling physical products sold by third parties. 4th, a finder may not own or operate any real or personal property that serves as a physical location for the purchase, sale, or distribution of products or services offered or sold by third parties. 7. A finder may not engage in any activity that would require the company to register or obtain a license as a real estate broker. Disclosures. The finder must distinguish the products sold by the financial holding company from those offered by the third party through the finder service. Lending, exchanging, transferring, investing for others, or safeguarding financial assets other than money or securities. 14. Providing any device or other instrumentality for transferring money or other financial assets. 15. Arranging, effecting, or facilitating financial transactions for third parties. And 16. Underwriting and selling health insurance and offering disease management and mail order pharmacy services. Post-transaction notice. A post-transaction notice usually is required to engage in a financial activity. The financial holding company must notify the Federal Reserve Bank within 30 days. The notice must describe the activity and the identity of each subsidiary engaged in it. Describe the identity of the company. If the financial holding company will not acquire control of the company, engage in securities, underwriting, dealing, and market making, engage in merchant banking services activities, and engage in insurance company investment activities. Federal Reserve Board determinations that an activity is incidental to a financial activity. A financial company, holding company, may request the Federal Reserve Board to determine that an activity is incidental to a financial activity by submitting a request containing an identification and definition of the activity, describing specifically what the activity would involve and how it would be conducted. 2. An explanation in detail why the activity should be considered financial in nature or incidental to a financial activity. And 3. Information supporting the requested determination. The Federal Reserve Board will act on a request within 60 days of the completion of the consultative process. Letter N, under financial holding companies, the Federal Reserve Board will make determinations about whether an activity falls within the scope of a permissible activity. A financial holding company may request that the Federal Reserve Board determine whether a particular activity falls within the scope of a permissible activity by submitting a request in writing that contains a detailed description of the particular activity. 2. An explanation supporting an interpretation regarding the scope of the activity. And 3. Any additional information requested by the Federal Reserve Board. The Federal Reserve Board will provide an opinion within 45 days. Letter O, under financial holding companies, is activities that are complementary to a financial activity. 1. Prior Federal Reserve approval is required, and 2. Notice to the Federal Reserve Board must contain 1 through 7. A. An identification and definition of the activity. B. An identification of the financial activity for which the proposed activity would be complementary. C. A description of the scope and relative size of the proposed activity as measured by the percentage of the projected financial holding company revenues that are expected to be derived from the activity. D, a discussion of the risks that the activity may pose to the safety and soundness of the subsidiary depository institutions. E, a description of the potential adverse effects, including conflicts of interest, decreased or unfair competition, or other risks. F, information about the financial and managerial resources of the financial holding company and other information requested by the Federal Reserve Board. And G, the Federal Reserve Board will inform the financial holding company of its decision within 60 days. Letter P under financial holding companies is regarding foreign bank financial holding companies. A foreign bank that owns a branch in the U.S. will be treated as a financial holding company if the bank is and remains well capitalized and well managed, and the foreign bank has made an effective election to be treated as a financial holding company. 2, a foreign bank is considered to be well capitalized if either its home country bank supervisor has adopted risk-based capital standards, it maintains a Tier 1 capital to total risk-based assets ratio of 6%, and a total capital to total risk-based assets ratio of 10%, and its capital is comparable to U.S. banks, or the bank has obtained a determination from the Federal Reserve that its capital is otherwise comparable to the capital that would be required of a U.S. bank. 3rd, a foreign bank is considered to be well managed if it has received at least a satisfactory composite rating of its U.S. branch or agency in the most recent examination, and the home company supervisor of the bank consents to the bank expanding its activities in the United States, and the management of the bank meets standards comparable to those required of U.S. banks. 4, filing requirements for foreign banks. The bank must file a declaration with the appropriate Federal Reserve Bank stating that the foreign bank elects to be treated as a financial holding company, the risk-based capital ratios and amount of Tier 1 capital and total assets of the bank, also stating that it certifies that the branch is controlled by a foreign bank that meets the standards of being well capitalized, that it certifies that all U.S. depository institution subsidiaries are well capitalized and well managed, and the capital ratios for all relevant capital measures. 5, effectiveness of foreign bank election. The foreign bank selection is effective on the 31st day after it was filed, unless the Federal Reserve notifies the bank to the contrary.